Welcome to This Explainer. Today, we are diving deep into BSE Limited's Q1 FY27 financial results. Now think about this for a second. Asia's oldest exchange, a place that literally started under a banyan tree way back in 1875, has totally transformed into a high-tech, asset-light cash machine. Just a few years ago, honestly, a lot of investors were completely ignoring this stock. But today? Well, its latest numbers have surprised the street all over again, and we are going to unpack exactly how they pulled it off.
Right off the bat, before we get into the heavy numbers, I need to point out that this explainer is strictly for educational purposes, okay? It is not financial or investment advice. The analysis we're going through is based entirely on BSE's Q1 FY27 results and publicly available info up to August 2026. So please, always do your own research or chat with a registered advisor before making any moves in the market.
We've got a great roadmap today. We'll be covering the BSE transformation, the Q1 FY27 financial highlights, the drivers behind the surge, fundamental health and moat, risks and valuation check, and wrap it all up with the investor's checklist.
Section 1. The BSE transformation, from slow-growing exchange to derivatives powerhouse. So here is the million-dollar question we're answering today. With these massive, surprising Q1 FY27 results, does this stock actually still have room to run? Or has the market already priced in all this perfection? To figure that out, we have to strip away the hype and analyze this business exactly like professional investors do, focusing purely on the cold, hard numbers.
And to understand the numbers, you first have to understand the model. Unlike a traditional manufacturer that has to pour money into heavy, expensive factories just to grow linearly, BSE operates on a brilliant asset-light model. It's kind of like a digital toll booth. Once the core technology and the infrastructure is set up, every massive spike in market trading volume drops almost straight down to the bottom line. It creates absolutely massive operating leverage.
Moving to Section 2, Q1 FY27 Financial Highlights, unpacking a record-breaking quarter. Let's look at the top line. BSE reported a staggering consolidated revenue of 1,701 crore rupees for the June 2026 quarter. That comfortably outpaced their peers. This kind of top-line explosion is a massive flashing signal of surging market participation in India.
But honestly, the bottom line is what's truly mind-blowing here. Profit after tax hit 853 crore for that exact same period. Stop and do the math on that for a second. That is roughly a 50% net profit margin. It is just an incredibly efficient cash-printing conversion from raw revenue into absolute profit. And the sheer scale of this year-over-year growth proves that this business isn't just growing, it's scaling rapidly. Revenue jumped almost 64%, but gross profit outpaced even that with nearly 72% growth. That pushed their gross margin to an impressive 68.4%. You just don't see that kind of cost discipline running alongside booming demand every day.
Section 3. Drivers behind the surge, explosive derivatives and record participation.
You know, as CEO Sundar Ramaraman Maruthi pointed out, this definitely wasn't just a lucky quarter. It was purposefully driven by real product innovation and a strategic pivot toward deeper data capabilities. The exchange isn't just resting on its legacy laurels. They're actively launching new benchmarks, like their recent IT sector derivatives, to deliberately capture more of that market interest.
The best part? This explosive growth is broad-based. The derivatives segment alone grew an insane 96% year-over-year, hitting a record 29,615 crore in average daily turnover. But add to that the BSE Star Mutual Fund platform, which processed a massive 23.4 crore transactions, plus a really thriving SME listing environment. They are firing on all cylinders to completely diversify their earnings. All right, Section 4, Fundamental Health and Moat, grading the business quality.
To truly get under the hood and understand their fundamental strength, we absolutely have to look at ROE and ROCE. These are the ultimate litmus tests for investors. They measure exactly how efficiently BSE is utilizing its capital to generate all these profits. High numbers here generally point to a highly defensive, wide-moat business that competitors just can't easily replicate. And BSE's capital allocation is literally elite. For March 2026, they boasted a return on equity of over 40% and a return on capital employed of over 54%. That showcases exceptionally high entry barriers. It's a cash-generating engine that simply doesn't demand heavy capital reinvestment just to keep the lights on.
So, piecing it all together, here is our fundamental scorecard. Now, while the business quality, the moats, the cash flows, and the growth are all exceptional, undeniable 5-star metrics,
you'll notice the valuation requires a much closer look. It's earning a cautious 3 stars here. That's a signal that investors need to be incredibly mindful of the premium they are paying.
Which brings us to Section 5, Risks and Valuation Check, a professional reality check.
Let's be real, even the absolute best businesses face threats. For BSE, you have to impartially weigh the risks. We're talking about sudden regulatory shifts by SEBI, fierce ongoing competition from the NSE, and the natural cyclicality of market trading volumes. If macro conditions sour or inflation spikes, retail trading volumes could drop, and that would directly impact their highly leveraged operating model.
The truth is, a phenomenal company can become a terrible investment if you buy it at an excessive price. So you really need to walk through these valuation steps to see if the stock is overextended after its recent run-up. Always match the current multiples, like your PE and EV to EBITDA, against historical averages and realistic, not overly optimistic future earnings projections.
Finally, Section 6, the Investor Checklist, your playbook for BSE Limited.
Before you make any portfolio decisions regarding BSE, I highly recommend running through this exact professional checklist. Track everything from their margin expansion and derivatives market share right down to their free cash flow generation. Doing this removes the FOMO, right? It takes the emotion out of it and keeps you focused purely on actual business performance rather than daily stock price fluctuations.
Ultimately, the numbers totally validate BSE's incredible transformation. Their latest quarter showcases massive operating leverage and broad-based market participation that most companies only dream of. But I'll leave you with this one critical thought to research further. At today's prices, are you paying a reasonable premium for that future growth? Take this checklist, do your own homework, and decide for yourself. Thanks so much for tuning into this Explain.